Hello everyone, welcome back to Edwards Trades. I'm here again giving you guys another market update, giving you my thoughts, my analysis on the SPYs, the QQQs, as well as a few core listed companies. And with that being said, let's get straight to the video. So, long story short, in my last video that I posted a few weeks, I think a week or two ago, I mentioned that SPY was going to have a little bit of a pullback and that we could see some sort of a little bit of a rally, right? Signaling a Christmas rally, depending on what Jerome Powell said. And with that being said, right, what has happened since that meeting or since his speech given out during that time frame, right? So we're looking at SPY, right? From, if I zoom in a little bit, we're still continuously making highs, another lower high, and lower lows, and a lower low, right? So what has happened ever since the speech? So long story short, Jerome Powell did initiate that he's going to lower interest rate, which is typically good for the market, right? Lower interest rates means more likelihood of or investors like to hear that, right? Leading on to 2023, the new year. So with that confirmation from Jerome Powell during his speech, the market kind of rallied, right, from the beginning of December, right? It rallied just a tad bit on the weekly time frame, right? But then again, we drop back down, forming this bearish candle structure here, right? Currently present. So what does this mean, right? So what has happened since then? So typically speaking, since Jerome Powell kind of had this false hope, or gave the market some sort of false hope that maybe the new year could signal lower interest rates and inflation until inflation tones down, and signals back-to-back reports, CPI data, of course, back-to-back reports of lower inflation, then we typically could see lower interest rates, right? But this Tuesday, right, this upcoming Tuesday, 8:30 in the morning, well, we have two major economic news coming out this Tuesday, or I should say Tuesday and Wednesday. Wednesday is the FOMC meeting where Jerome Powell is going to initiate either a 0.75 basis interest rate or 0.50. As I always say, 0.75 is not good. Higher interest rates means more downside to the market. Lower interest rates, 0.50, means higher movement in the market, right? Typically bullish, right? So CPI data this Tuesday at 8:30 in the morning is going to signal whether or not we're going to have this quote-unquote Christmas rally if the report or the inflation report comes out lower or as expected, lower, and shows some improvement with inflation, right? We can start off the new year with a rally and that'll be good for the market, bullish news and outcome, right? But from a structural standpoint, right, typically this price action that we'll be seeing for the beginning of December has been pretty bearish. And I'm not going to lie, it's been kind of, respecting this lower high trend line that I've drawn out here, right? We, since the beginning of the year, it's rejected this line, rejected here, rejection. We just rejected it during the beginning of December, right? 1202 on the bottom of the screen. December 2nd, we rejected it, right? If we go to the daily time frame, right, we hit this trend line here. We closed above it, but we ended up rejecting it again during, this was the 2nd. We retested it during pre-market highs or pre-market trading, and then we managed to close right back down to these levels of roughly, I think this is what, 393, right? And we're still, respecting this upward trend line as well. And, this was when, so this price action here is when Jerome Powell mentioned that, he was going to lower interest rate hikes by 0.50 if he sees back-to-back reports of CPI data lowerings, right? This signaled the rally. SPY almost broke above it, right? If SPY were to break this overall trend line or hold above 410, and form a higher high situation, then could have signaled a bullish reversal and a sign of a bullish market. But clearly that didn't happen. We're still rejecting this overall trend line, right? And now we're just sitting back down at these currently at the low of 390, right? So why is that important? The reason why is that important because this Tuesday, it's really a make it or break it type of scenario. If the inflation report or the CPI data this Tuesday comes out higher, right? So just to bring you guys up to speed, the last report came out to 7.7% from the prior report of 8.3%. So it's a significant drop, right? And the market rallied somewhere around this time frame. The market rallied a little bit because of that reason, right? Now we're waiting for the next report. And two scenarios could happen, right? Overall, my opinion is that the market is pretty bearish, right? Maybe we might not have a Christmas rally. And of course, if the inflation report comes out higher, there's some talks of a recession that could possibly happen if the market decides to move lower, because again, with lower highs, you have to have lower lows. So we could crack below 348 and form a new lower low in the tech sector, which is obviously not good. And of course, people don't want to, start the new year, with more downside, or another, well, possibly another year of bear market territory. We don't want that to happen. So, Tuesday is very important. It's a make it or break it leading into the new year. So, what is the likelihood scenario, and what do I think it's going to happen, right? So, typically, from me looking at the reports, there are signs of there are signs of improvement of inflation, which is good, but the overall structure is pretty bearish. Every time, I think Friday we rejected, we close high and then we drop back down. We're kind of like in this choppy formation from 390 all the way to 390. What is this, like 400? We're kind of sitting around this chop zone. Of course, the downside is that if the market wants to be bullish and have a Christmas rally, we must break and hold above the 408 region on this overall downward trend line, right? To signal a bullish reversal and form a higher high and a higher low, right? Bullish, right? But what the market is pretty much worried about, right? If I go ahead and draw this out, the two likelihood scenarios is that this big gap here, right? We don't want to fill this gap. This hole here is typically filled, so the market could see some downside if the CPI data comes to bad. We can see the market, break the 388 support level, fill this gap, and then continuously drop and make new lower lows. But overall, the price action since the beginning of this, so far for December, has been pretty bearish. And obviously with Jerome Powell being so bullish on his, has kind of being lighthearted with the market, which led to this rally here on the 30th, right? Investors don't want to hear, they don't want to hear this back and forth from him, and obviously think that he's lying about the situation in the market. So crucial data this Tuesday. Wednesday we have he's going to speak again and decide whether to do a 0.50 basis rate hike, which is bullish, or a 0.75 basis rate hike, which is bearish, right? So those are the major two outcomes. So I think as far as this structure goes, it could be bearish. We could crack the lows here of 390, fill this gap here, and make a rotation lower, right? This was from all this, hype about lowering inflation and so on and so forth. Or if the report comes out good and we want to see a typical rally, break this trend line, and then bounce off of it and continue to move higher. Those are the likely two scenarios. But overall, the information given to me is typically bearish. We broke out of this upward trend line ascending channel here. We've been respecting it, but now we're kind of like underneath this channel, right? I'm trying to extend it. There you go. So we're kind of underneath this channel here, right? We kind of broke under it. So if we rejected it Friday's trading session on the 9th, we rejected it. Now we're sitting below it. So again, we're just holding above the 390, 388 region, so which is pretty crucial. If we fill this gap, see more downside, and so on and so forth. So if you go to the QQQs, or it's typically the same situation, or wrong one. Right? Again, structure is pretty bearish. Yet again, a lot of people are kind of conflicting with the information given here, that it's ascending wedge or it's ascending triangle, it's a bear flag, so on and so forth. So a lot of people have this structure differently than I do. But point being, again, we haven't really hit the two, or if we go to the weekly time frame, right? But bearish candle here, right? Still rejecting this overall, trend line here. So SPY kind of in the lead, QQQ is kind of lagging behind just a tad bit. Still sideways price action, a little bit bearish because again we're rejecting the 286 region here. Rejected, support here, rejection, support. So again, we're kind of sitting sideways, waiting for confirmation of whether or not the CPI data is going to come out bullish or bearish. But again, same outcome. Break if data comes out to be high in inflation, right? No improvement. See a breakdown here. We're probably going to see a breakdown here. Probably retest that cat bounce of 280 here and see lower lows in the near future. Probably towards the end of the year. If bullish, again, we hold above 286 and crack the highs for December of 295, and we got to get above that region and zone, right? Also too, from a chart perspective, right, if we want to get into the patterns that I'm currently seeing for SPY and QQQ, you have a head and shoulders pattern as well. So I would suggest that we could see a rally. It's a 50-50. I really don't know. We could see another, maybe possibly low bounce, form the right shoulder, and then fall over, right? That could typically play out, or it could just be, it may not happen and we just straight break through, because as you can see in the 4-hour time frame, during Friday's trading session at 9:30, we rejected the resistance level of 285, weren't able to hold above it, and then we managed to come right back down in this sideways little pocket here of support of 280, as you can see right here, right? Still holding above it, support, support here, support led the bounce, support, and as well as here, support in this region here, resistance turns to support, so on and so forth. If we go back to SPY, show you guys on the 2-hour time frame as well. Again, I can move this up just a tad bit here. Right here, same. It's not perfect, but it's still typically the regions. Resistance turns into support. We're kind of hanging right above this 390 region. If we break below 390, bearish. If we hold above it, bullish. But it all depends on what the data is going to reveal. It says, again, same thing as a QQQ. Head and shoulders pattern is what I'm seeing at the moment. Left shoulder, you got the head here, right? And then possibly, dead cat bounce leading into the, if we get a dead cat bounce and we have this right shoulder form, right, then obviously, puts for CPI, and we can expect lower, so on and so forth. And also, as a quick side note too, I'm going to give you guys a little life hack here. And as far as when CPI data comes out, typically speaking, right, don't take my word for it, but from my experience, typically speaking, when the market is very aware of what is going to happen ahead of time. So typically speaking, right, I'm just saying it out the blue, but typically speaking, right, like hypothetically speaking, I should say, right, hypothetically speaking, when the market expects bad news, right, typically speaking, hypothetically speaking, from what I've been experiencing, right, throughout all these reports since the beginning of the year, the market likes to pump, right, we have a false pump where the market rallies, right, people think it's bullish, right, just so when the news comes out the next day, it turns out to be bad, and anybody who had positions of calls or whatever gets slammed and drives the selling pressure down and causing this downward spiral. Same, vice versa. If the market wants to be, if the market expects good news, it's vice versa. It would be that the market dumps first, trapping a bunch of bears who bought puts, right? The market, let's say, I know I'm looking at Apple, but as an example, we drop, and then, since they expect good news to come out, boom, we're bullish. Anybody that bought puts got slammed, pump, so on and so forth. So that's typically what I've been experiencing throughout this every CPI report that comes out. So that's a little pro tip, little life hack. But this is a hypothetical. I'm just speaking for myself and my experience. But that's typically the scenario that plays out when it comes to CPI data rolling out. So, two scenarios for Monday's trading session. Again, it could be that, the market dumps first, trap bears, then, go long calls, or it could be, vice versa. Again, if the market knows that bad news is going to come around, we pump first, trap all the bulls, and then we dump and then drive, again, selling pressure, so on and so forth, right? But I know I'm just speaking all that, but okay, but I know I'm speaking kind of nonsense, but that's typically my experience, because again, the market is well aware of, I'm sure they know ahead of time, what the news is come out before us traders. I'm sure they know ahead of time, and that's just my overall experience. But moving, ignore that, but we'll see. I might place calls, lotto calls, and lotto puts depending on the overall situation of the market. So really just depends. If we dump first, I expect good news to come out. Maybe we fill the gap and then we push higher. Or again, if the market expects bad news, we pump first, trap all the bulls, and then dump, right? But enough rambling. Let's go ahead and talk about Apple, right? So we zoom out, right? We go ahead and draw this trend line here. Again, since the last when Jerome Powell talked, which is right around this region, we kind of been sitting sideways in this chop zone, respecting the, I would say 148.50 region to the, here. We rejected this the trend line here. that I've drawn out, right? Rejected, rejected, rejected. Major rejection here during last Monday's trading session. I think it was Monday. We rejected this major trend line, and now we're sitting right back down here at the lows of 140. I'm going to go ahead and adjust this trend line here. So levels to look out for, again, the major mover is going to be CPI data, right? So if this is, we're respecting the 140 region, support, 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 right? Resistance right around here, this region. So pretty neutral as far as Apple's trend line. If I go ahead and draw a trend line from here to this region, right, it's pretty neutral. We're kind of sitting in this neutral zone here. So we could be just going back and forth until we see some prior movement, maybe towards the end of the year, right? But so far, pretty sideways activity, not a whole lot of movement. During Friday's trading session, we had some sort of rally. We rejected this resistance level. I'm going to go ahead and lower it just a tad bit. We rejected roughly around 145-ish. 145 is what we rejected here. Obviously, it was previous resistance right here. We rejected it, and we've fallen right back down at the same lows from last Tuesday or last Wednesday, lows of roughly 141, 140, right? So again, two likely scenarios. CPI data goes up, we probably hit here and come back down, chop zone, but overall sideways activity for Apple. We'll see what CPI data reveals. We're going to go over Tesla. You kind of have this, chop zone, not a whole lot of price action, not a lot of movement. I know it's been seeing a lot of downward momentum since the last report, right? And, again, talk about levels here. I would just wait for CPI, but again, just sideways, not a whole lot of movement. We could be seeing lower. And right now we're currently rejecting the 180 region. If we see more rejection, see more downside, maybe crack lows of all-time low of 166. If we go to monthly time frame, the next support level would be roughly in this region, 130. If the market sees more downsides, it's falling SPY in the QQQ, right? So we're going to move on to Microsoft. All right, going to Microsoft. Okay, so I did mention we have some sort of bull flag scenario in Microsoft. I think in my last video, I mentioned a bull flag scenario. It kind of played out, right? So bull flag scenario played out for Microsoft, right? If I extend it, we retested the support, right? Broke out of the channel. We kind of rejected here, came back down, retested this trend line, sat right back above, and now we rejected right here, right? Rejection. We weren't able to hold above the 250 zone, and now we're sitting right back down at this channel here, right? This kind of channelish, sitting right on 240. So it looks like a head and shoulders as well. If we go to the 1 hour time frame, same scenario here. Looks like a head and shoulders head, left shoulder, right shoulder possibly forming. Also, you could look at it as a bear flag. If I go ahead and draw this out really quickly. Oh, whoops, wrong tool. If I draw this out right here, boom, right here and here, bear flag, boom, right there. Bear flag scenario. We could be waiting for another rejection level of 250, possible bounce, fall over, following CPI, but we'll see when it comes out. So now we're going to take a look at AMD. I was, again, bull flag scenario played out. We rejected this trend line or this resistance level of, I think it was $80. Hard rejection. We tested it once, barely twice. Third time was a charm. Fell over. Now we're sitting right below or at close below support of $70. So we could see possible lower movement. It was a double top confirmation as well. So it dropped, and then we could see the next support level would be $66 if not, see lower, fill this gap. Next support level will be 60, so on and so forth, right? And also, if you go to the weekly time frame, we did also excuse me, I correct myself. Let me correct myself. If we go to the 1 hour time frame, we close right below support of $70, right? Support, rejection, pre-market hours, weren't able to hold above it. Bear flag scenario played out, and now we close right above it, so we expect AMD to go lower. So now we're going to take a look at NVIDIA. NVIDIA, kind of the same scenario. We did have this bullish triangle or bullish pennant pattern play out. If I go ahead and go to the 4-hour time frame, excuse me, right, respecting this trend line overall, right, ascending triangle played out, boom, respect the trend line, seeing higher. So again, pretty bullish compared to AMD. It's been respecting this overall upward channel. We're holding support roughly around 160. Now we're sitting right back of resistance here, resistance. We almost held through it, came back down, tested support, back off of it. Now we're sitting right above 170. As long as it holds above 170, it consolidates, and we could possibly see a next rotation higher to 180. Of course, this looks like a double top formation. If it breaks and can't hold above 170, expect it to just pretty much come right back down to the 160 range. But overall, this move price action is very bullish in my opinion. Definitely more bullish than AMD. So we'll see if the market holds. And also, from a daily perspective, right, it broke out of its channel here, right? This descending channel here. It broke out of it, tested its support, and now it's sitting, back at prior resistance of 170, or it's sitting above resistance at 170. Support of 170, which was resistance earlier, and the next level is we're looking at is 180. Now we're going to take a look at Meta, and that would be it for today's video. So, still has a long way to climb. Obviously, we're sitting right back of this region. We did reject resistance of $123. Right here. So it was support, fell back down, had this pennant pattern play out. It worked. Now it failed back over, and then we're just sitting sideways in this channel. So again, bullish if we break this overall downward trend line, but since we rejected, I expect it to hit lower. But support is at 110, resistance is 123-ish, 24-ish. So yeah, we'll see if, it all depends on the CPI data coming out. So that's it for today's market analysis video. I just wanted to get it short and sweet and to the point. So again, this Tuesday, 8:30 in the morning, CPI data. Look for possible price action tomorrow to be kind of choppy. A lot of volatility this week. Two major economic newses. Data Tuesday, and then FOMC statement Wednesday. So stay tuned for that. And again, hypothetical scenario, if we dump first, expect good news to come out Tuesday. If we pump first, expect bad news to come out Tuesday. That's a hypothetical scenario, so we'll see how the market plays out. But overall, bearish outlook in the market from a structural technical analysis perspective. We're constantly rejecting this overall trend line. We did reject it during the beginning of this month. Now we're just waiting to see CPI data will give us, will give us enough momentum to break this trend line and maybe have that Christmas rally, before the new year. So I hope you guys enjoyed today's video. Leave a comment, like, and subscribe. Any suggestions, any comments? Maybe you guys want to, give your technical analysis in the comments and, let me know what you guys think is going to happen. But overall, it's a little 50-50. But structurally speaking, it looks very bearish. We may not have a Christmas rally, and we could be seeing another possibly bear market, lower lows till the end of the year. But we'll see what CPI data reveals as well as FOMC statement. But overall opinion, bearish. Yeah, so I'll see you guys later this week and have fun trading. So I'll post another video Friday on the outcome of all these decision makings, but again, volatile week this week, so just stay tuned for that. So I'll see you guys in the next video. Peace.